Hi guys, this is Ray from nextforextrade.com. Today is Wednesday, the 24th of July, 2019. So let's kick off. First of all, I did have you'll notice I've got a trade in at the moment on the AUDCHF. I had a trade in yesterday, which I've done an update on. I'll leave a link for that in the description. I won't go into that too much depth again today. But first of all, what I wanted to cover was a trade that I got out of at break even yesterday, which was for the GBP JPY. You can see it's this trade here, and you can see it's just over break even I got out. So after commissions, it was about £1 something in profit. So let's just make sure my mic's turned on because I have had problems previously. Okay, so just for ease, what I've done is set up this entry on these charts so it's easier to view. So as always, daily here, 4 hourly, 1 hour, 15 minute, 5 minute here. So what you can see on these, the hourly and the 15 minutes, is the purple line, or this line here is the entry, lower line, and this was the stop loss here. Now these two bars that I've got in here and here are the entry time and the exit time. So we can see that my entry on this was around about here on the daily. So it was on this candle here at this price. So the premise for getting in on this was obviously seeing the downward movement that we're seeing on the daily, and it making lower lows and lower highs. And it was also in a standard deviation channel. If I wrap that around it, if it would work for me. So in the standard deviation channel, what we were seeing was the price kind of hugging the mean of the average of the standard deviation channel. Ideally, like I said yesterday, I prefer it to be interacting with the upper edges of the channel, but in this instance we did have enough context to consider shorting it. And the 4 hourly was also echoing what the daily was saying, just a bit more granular, and the hourly in the lower time frames at the time of entry were giving good enough reason to consider shorting. So I'm just going to put this back to what we would have been seeing at the time of entry. So what I would have been looking at was the price having moved up here, starting to make higher lows and higher highs. It flattened out, but then had started to move past the previous higher lows, starting to make lower lows, which could be an indication that it's kind of becoming congruent with the other higher time frames. The reason I got out of this, I've moved that, dear oh dear. All right, let me just find out what that price was again. Let's put this entry back. And voila. Okay, so the reason that I got out of this was the price didn't do what I wanted it to do. And you can see here it started to flatten out, which is, I mean, to be honest, it's characteristic of this price action that we're seeing, that each of the kind of cycles are quite flat. But what I wanted the price to do was to kind of bust lower and start making lower lows from my entry point, which it didn't. It started to make this higher high here, and at that point I decided that rather than kind of leave myself open to the risk of being stopped out unnecessarily, I had the option to break even on this, which I did. And you can see even now it's still doing that. It's still kind of oscillating in this kind of channel. It's very sideways movement, so it's not definitively breaking lows or making highs. I'm still bearish on this overall, but it would be a trade that, because of the price action that I'm seeing here, if it were to go in my favor, I would anticipate it would take quite a while to happen. So several days, possibly end of week into next week. And I don't really want to be holding swaps on this, because it just eats into the profit because of the size of the position that I put on this. So I decided to go flat on this, take out the position, and break even. And that's definitely one of the things to be aware of in trading. It's where I guess the distinction between a game of playing something that is a game of skill and a game of risk. I think, sorry, it's a game of skill and a game of, chance. I think trading falls somewhere in the middle. So you can control some of the things that happen in trading. You can control how you enter, you control how you exit. You can't control what the market does overall. If you think of, I don't know, gambling in a game of blackjack. Is it blackjack? No, what's the other one? Roulette. When you'll have to forgive me on my terminology here, so I'm not up on my casino terminology, but I think it's the croupier puts the ball into the roulette wheel, spins it, you put your place your bets, and basically as soon as that ball starts spinning, all bets are off. You can't do anything once you've made your decision to bet. It's a pure game of chance going forward. Trading is different in that even after that ball starts spinning, so after you've placed that trade, you still have the power to make a decision to stop the trade. You can add to it if you wanted it to. You can take profit off the table. You can control your entries and exits. There's certain factors that you can control. In a pure game of chance, you don't have that type of control. So trading is part, in my mind, it's part risk and it's part skill. The skill part is how you manage your entries, your exits, and your risk. And obviously the chance part is that the market does whatever the hell it wants to do and goes in whatever directions it wants to go in. So in this instance, this is one of those times where I've exercised my right to control the trade, and I got out at break even though overall it could still have gone in my favor. So okay, let's have a look at the other position that I've got on at the moment, which is on the AUDCHF again. Like I said, I did cover this in an update video yesterday, so I won't go into too much depth here. But I have taken a new position on this at 2%. And this is because on the daily we're seeing some nice downward movement, lower lows and lower highs. We've also seen interaction with the upper standard deviation channel, showing signs of it being overbought. And the 4-hourly is now congruent with what the daily was saying as well. So we're seeing this downward movement that we're seeing on the 4-hourly. Same on the hourly, same on the lower time frames as well. So everything is pointing down, which gives a good premise for a short. So in this instance, I have a 2% risk on this, and it's a 1-to-1 reward to risk that I'm going for. Now, the only thing that is, although everything is down, I'm still slightly. Let me just see if this is still. Okay. Oh no, that's good actually. What I was worried about yesterday was this retrace that we were seeing in this downward movement. So this retrace of this kind of upward movement that we were seeing yesterday, when I'd entered the trade, it was kind of like this. So yesterday's candle was finding support off of the standard deviation channel. Now in today's candle, it's moved past that low and it's broken that support, which is good. Because unless that had happened, this could still viably have been, if we take this off, this still viably could have been a trend reversal where we see the price kind of move upwards in this channel like this. Now that it's broken that level, it gives more credence to the fact that this price could move lower in the near term. So because all the kind of stars are aligned, if you like, in this instance, I was happy to take the 2%. It may be something that I manage should I see signs of support appear on the lower time frames. but as it stands, I'm happy to leave this in for the 2% goal and a 1-to-1 water risk. So let me just have a look over the other market position charts. Haven't had a look as of yet, so this is, you're seeing this at the same time I am. Yeah, I'm not going to take multiple positions, but if I were looking and I wasn't already in AUDCHF, AUDCAD looks pretty decent for shorts. Reason being, we've got our standard deviation channel being overbought. Candles interacted with the top, it's moved past the low, started to move lower. 4 hourly, we had this structure here which has started to be broken, so we've had the higher highs and the higher lows, and the price has moved past the previous higher low and started to move down and viably start to find resistance off of that kind of standard deviation line there, and that's echoed in the lower time frames as well, where we start to see lower lows and lower highs. So yeah, viably that would be good for shorts. Yeah, again here, similar story to AUDCAD. Overbought area here, major area of resistance that I've probably pointed out in previous videos. Some nice break of trend line here on the 4 hourly, moved past the previous higher low, so that's a bearish sign. We've seen these start to create lower lows and lower highs. What I would want to see on these lower time frames though is a bit more value for money, so for the price to pull back and find resistance maybe off of a standard deviation channel. So at the moment it's kind of at the average here, so for me this would be slightly too expensive. I'd want to see it pull back. I mean, it's probably not all the way to here, because the reason I'm saying that is what I'm looking at is this price structure here. So this is a high, lower high, lower high. We can see for it to pull all the way back to this kind of area here, it would in fact surpass this previous lower high here. So yeah, it's kind of a wait and see on this. So maybe in the next hour or two, it'd be worth looking to see how this is interacted either with this level of potential resistance, or if it's interacted with the standard deviation channel as it moves down, and be looking for reversal candles off of that and the price to have moved past the low of the reversal candle. AUD Aussie, let me just check on time. Okay, similar story. This is a bit too late for me. In fact, I'd be looking at this, just wary of this on the daily, so I'll probably leave this. I'd want to see how this candle pans out on the day, because it looks like it could find support off of that level, but similarly it could still be in the context of a downward move, but we don't know until it's pierced past this kind of level. So I'd wait on this to close. So AUD/USD, no, I wouldn't want to trade this today. Just clean some of this up. CAD CHF, no, two sideways. Wouldn't trade this today because of what we're seeing on the daily. There's some nice interaction here. We've got high lows and interaction on the lower edge of the standard deviation channel, but we need to see signs of bullishness. So the price moving past these previous lower highs, for example, would be a good sign. So that probably won't happen today, but it's one to keep an eye on, but not today. No. 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 Too expensive. So this isn't tradable, but as I mentioned in the previous video, what this Euro GBP needed was a pullback, because this kind of extended move here isn't really tradable. In a trend, we want to see higher, the definitive kind of higher highs and higher lows. Like we've seen these highs here, these lows here. This is kind of just one chunk. So this pullback is good. This needs to retrace and then start to show signs of bullishness, which would make this a bit more tradable for me. But given this is a daily chart, that isn't anytime soon.